this is April 10th, 2025. And today we want to talk about nearshoring, what's going on with nearshoring, and the role that Mexico plays and will continue to play in the future global trade, given the very significant changes that we are seeing coming out of the White House, President Trump, trade policy. These are confusing times, no clarity, definitely a more restrictive environment. Tariffs, obviously, that's all over the place. But what's going to happen? And I think the first commentary before we jump into the nearshoring outlook for the North American region, Mexico, Canada, with the U.S. As a main player, I think the objective elements that we have, number one, we need to incorporate a higher discount rate to our investments, to our investment outlook, because of uncertainty. And also because of uncertainty, we have to assume that there's going to be a deferral in investments and a lower consumer confidence. And those two variables will result in lower growth. I'm not saying this is a recession that we're looking into the future, or how deep or how long an economic slowdown will be. But compared to what we were seeing 3 months ago, I think it's very reasonable to assume that now we're looking at a lower growth rate for the next 12 and 24 months. So those are the two key assumptions. The other important assumption is U.S. trade policy is changing. The U.S. Global outlook is changing as well. So the pendulum is now swinging back again away from globalization and back into regions, countries. So the world order that was built over the last 50 years, 80 years, globalization will now change. So with that, those as key concepts, what are we looking at in terms of the nearshoring outlook? And first of all, nearshoring, remember, is this global trend that actually got started during Trump's first term, shifting away from sourcing from China and from Asia, and relocalizing all these productive chains back into the North American region. Mexico has been a big beneficiary of this. So what has changed and what will change in the coming years, given this new world order that we're looking at? So let's go right into the very short term. Short term, the U.S. is in correction mode. These numbers, these charts, are as of the close of March. The last 2 weeks have been extremely volatile, but still, by the end of March, EWW is the Mexico ETF, was up 8.8% in US dollar terms. The S&P 500 SPY was down 4.27%. So Mexico, maybe surprisingly, maybe not so surprisingly, has been performing well, at least the equity market. But also, I think we've seen this in the headlines. Mexico has done really well. President Sheinbaum has done well in terms of her communications with President Trump. I think Mexico is one of the few countries that is in good standing, so to speak, as of now with President Trump, and avoiding or averting this frontal shock with the U.S. The Mexican peso has appreciated. We can see this has been actually stable and appreciated from the beginning of the year. And so what's going on with the North America region? So obviously this swing away from globalization and back into nationalism and protectionism. The USMCA is still there, the free trade agreement, but in reality, it's no longer in operation, right? Because the main player, which is the U.S., by way of the executive branch and President Trump, is now basically saying it's going to be a one-on-one discussion, one-to-one discussion. It's going to be a case-by-case situation. So even though the USMCA is still there, and it does provide some framework for the working relationship between the three countries, it is no longer in effect. I think we have to discount that and just assume that that is the case. However, if we still consider the North American region as a bloc, this is the number one economy in terms of size, the number one trading bloc. And even today, and if we look at Mexico, Mexico is an important partner within the bloc. Obviously, it's the smallest of the three economies. The U.S. is the largest, followed by Canada. But also, I think important to consider Mexico's demographics, which are much more favorable, a lot younger population, and also I would point out to the capacity and ability that Mexico has to absorb immigration from the south, that is Central America and other parts. And given what's going on with the geopolitical situation, Mexico can actually benefit from absorbing this migration population and taking benefit of this cheap labor going into the next decades. Mexico's growth has been lagging. I think if we look at the charts for GDP, it's been hovering around 1%. And if we look at the GDP per capita, it's just a disaster. It's been a massive mismanagement by, in my opinion, the overall economic policy for Mexico. For the last 3 decades, it's not a problem of the current party in power. It's been just an overall mismanagement of a great opportunity that we've had since the original NAFTA back in the 90s. But those are also opportunities into the future, I think. Industrial production stable, unemployment rate at historical lows. So at least we're not growing as an economy in terms of the overall economic growth for Mexico, but at least the country is keeping up with jobs, formal jobs for the population. Imports and exports. I think what's important here is Mexico has been benefiting particularly this last 12 months, and really exports are booming as of now. And I think that's a key theme within the nearshoring assessment of what's going to happen into the future. I think Mexico is a big winner with this confrontational situation between the U.S. and China. Inflation under control, good policy from the Mexican Central Bank. On the other hand, government debt continues to grow and expand. We're at maximum levels, and even though the absolute level of foreign reserves is at an all-time high, it is low compared to the size of the economy in terms of share of GDP. But that's also on the account of the recent appreciation of the peso. The financial system is still strong. NPLs for the banking system at 2.1%. The consumer is healthy, as measured by domestic car sales, retail sales as well. Now, what about the context of North America free trade? Again, from the first Trump administration, Mexico has been the clear winner, the big beneficiary here at the expense of China, going from number 3 in terms of the trade relationship with the U.S. to number 1. The Mexican peso has appreciated as well as a reflection of that situation. Canada also benefiting there. So I think all these macroeconomic indicators just point to the further integration of the North American region, and I think that is our house view. That's what's going to happen into the future, even as we're experiencing today this restrictive situation, and particularly between Canada and the U.S. I think the economics will prevail into the longer term, and the region will continue to integrate. Mexico will continue to benefit and will continue to take a larger and larger share of the exports of the world by way of expanding its exports into the U.S. Uh, Obviously, the performance against the BRICS improving in that regard. We can see an interesting case for Argentina here. We see the orange line with the recent reforms that we're seeing in the economy in Argentina. But still, I think Mexico faring relatively well within Latin America and within emerging markets. We can see that across the board, across all the different metrics. Interest rates have normalized. Of course, within emerging markets, Argentina and Turkey will continue to be the outliers, but excluding those two economies, I think Mexico's doing pretty well in terms of the normalization of the yield curve and the management of interest rates by the central bank and inflation, definitely. And again, the financial system in a very healthy situation. I think much better positioned compared with other emerging markets economies. Now, looking at the nearshoring phenomenon, the timeline really begins with the Trump administration, the first Trump administration back in 2018. The U.S.-China tensions escalating in 2021. And then I think it's also important to consider it's been almost 5-6 years now after the pandemic. Time goes by very fast, but the pandemic was also a test to globalization and to the way supply chains had been built up until then. I think the pandemic alerted the world about the risks of this extremely integrated global economy, and I think that's another driver for regionalization going away from globalization, and that's really what we've seen over the last 5 to 6 years. Industrial activity in the U.S. has revived for sure, but also in Mexico. Mexico has recovered quite significantly, attracting foreign capital, foreign direct investment reaching record highs, and this comes across very different industries in very different regions within Mexico. It's not only the north; it's also central Mexico. It's also parts of the south, and across many industries and from different origins. It's not only U.S. companies; we also see Chinese companies, but also European corporations establishing operations in Mexico. Again, we can see this across different industries: mining, food and beverage, manufacturing. Definitely will continue to be number one. But I think so 5 of the top industries that we have observed booming with this nearshoring phenomenon has been, for sure, industrial real estate. That's one of the enablers of this relocalization of value chains. Warehouse and logistics, transportation infrastructure, transportation logistics, and some specialty real estate like data centers. Now, in terms of tariffs and the new world order, really, we think tariffs are being used as a negotiation tool. We've just witnessed that over the last couple of days. First, there's an announcement that it's across the board. Now there's a pause for anything above 10% for 90 days, with the intention of different countries, different economies reaching out to the U.S. and looking to negotiate. I think this, has some merit to it, but I think for sure there's a lot of uncertainty, and just the way it's being implemented is generating a lot of uncertainty across markets. Especially in terms of the growth outlook for the short term. Deferral in capital expenditures, lower consumer confidence, and those will have an effect on growth for sure. Mexico and Canada have been treated well. The USMCA is still there. It's still in place, as I mentioned at the beginning. Even though, as we've seen in reality, in practice, it doesn't matter. It could continue to be there, but it will boil down to the decisions of a single individual, which is the U.S. president in this case, right? So we saw this little chart here all over media over the last few days. There are some exemptions to the USMCA. I think here the most important part to keep an eye on is the North American content. There's a lot of free trade, not only within the three countries, but from other parts of the world. Even companies that have established operations in the U.S., not only Mexico and Canada, but Chinese companies establishing operations in the U.S. as U.S. companies, subsidiary companies, that will now be 100% content, right? So that's a key variable to monitor, and that's I would say a more challenging part of the whole arrangement within free trade in North America. I think for Mexico, this is an opportunity. Definitely for Canada as well, but in the case of Mexico, I think the two key things to keep in mind is, or three things really. Mexico is not a risk or an adversary to the U.S. as China is. At least it's perceived as an adversary. It has the economic might. By some measures, it's already the number one economy in the world, maybe number two. It has a military power that is very significant, and that is ideologically opposed or in opposition to the capitalist view of the world that the U.S. advocates. So in that regard, Mexico is not a threat to the U.S. On the contrary, it's an ally, a good neighbor that has, I think, friendly relationships and friendly policies towards the U.S. in general. And beyond that, it has two key things to offer. And those two things are immigration control and drug trafficking control as well. Those are the two things that Mexico can offer, in addition to efficiencies in terms of the supply chains and a friendlier supplier to the U.S. So I think those are the factors that will prevail into the future, and reason why I think the further integration of the North American region, including Canada and Mexico, with the U.S. is really what will continue to happen over the next years and decades. Very similar to Canada. Canada is an ally, has been a key ally to the U.S., not only politically, but militarily as well. So in addition to the efficiencies that the proximity provides, I think in the longer term those conditions will prevail. Now, in terms of Aztlan, we have identified several names in Mexico, in the Mexican equity market, that by way of liquidity, size, are investable opportunities. Aztlan doesn't invest in Mexico particularly, or in emerging markets, but Aztlan has created the Aztlan Nearshoring Index. So in the creation of our Nearshoring Index, we have identified some companies in Mexico that are either in transportation and logistics or in the industrial real estate space. And we've done the same in the US and in Canada. But right now we're just focusing in Mexico, right? I think the equity market is very concentrated. These 25 names are the investable names. But I think we can find very high quality names there that can represent long-term investments and that also have adequate corporate governance. I think that's been an issue in Mexico and emerging markets, corporate governance. So there are a number of names here that do pass the test of corporate governance. So it's an interesting market that's concentrated, that has a few high-quality names with attractive valuations, whether it's price to earnings, price to book, or on a dividend yield basis. And in terms of the nearshoring stock selection index, AZNR, which is calculated and powered by S&P Dow Jones Indices, we have followed a methodology. First of all, it has to be a company that is headquartered in either the US, Canada, or Mexico. And then after that, we identify key strategic sectors, the ones that I mentioned, like industrial real estate, transportation, logistics, data centers. And then once we identify those companies within the region and the key strategic sectors, we create an investable universe from which to pick the 30 best names. And how will we pick those 30 names? We follow our quantitative model: high free cash flow, low valuations, high return on equity, high earnings growth, and we added there a proprietary estimates or price factor. And with that, we've come up with this set of companies that constitute the Aztlan Nearshoring Index, AZNR, and that we think are a good sample of companies that represent the nearshoring phenomenon and that should continue to benefit, given that these companies are enablers of the nearshoring phenomenon. These companies are either industrial real estate companies, or ground transportation companies, or infrastructure companies within North America that will continue to enable the nearshoring phenomenon. So, to summarize and to conclude, we continue to see a positive outlook for the nearshoring theme going into the next years and decades. We see a very strong case for Mexico and the North American region. Things will change definitely from what we have known up until now in terms of the USMCA and NAFTA before that. But the economics will prevail. That's our base case, that the economics will prevail, and economics and geopolitics indicate that there should continue to be a further integration of the North American region, further driving the nearshoring phenomenon as a key economic force for the North American region. With that, we close today's presentation. Thanks everyone for joining, and see you next time. Bye.